The world just watched President Donald Trump fire a shot in his trade war that could cost America its economic crown. On June 4th, 2025, Trump slapped crushing tariffs on allies like Canada, Europe, and Taiwan, while China sidestepped the blow with chilling precision. Beijing's silence isn't weakness, it's strategy, and it's outplaying Washington at every turn. As G7 alliances fracture, U.S. shelves empty, and inflation spikes, Trump's gamble is handing China the keys to global dominance. This isn't just a trade spat, it's a seismic shift in power that could reshape the world economy for decades. Let's dive into how Trump's misstep is backfiring, why China's winning without firing a shot, and what this means for your wallet and the future. Trump's latest move was meant to strong-arm China with a threatened 55% tariff, but Beijing saw through the bluster. At a critical trade meeting, U.S. negotiator Scott Bessent was rebuffed as China refused to engage, forcing Washington to delay the tariffs. Instead of regrouping, Trump turned his fire on allies, hitting Canada with a 35% tariff, Switzerland with 39%, and Taiwan, America's vital chip supplier, with 20%. These aren't rivals, they're partners, and now they're reeling. Canada's lumber, dairy, and auto exports, which account for $500 billion annually, are collapsing, with Statistics Canada reporting a 15% drop in U.S.-bound trade. Europe faces a 15% tariff across sectors, infuriating EU leaders who call it a betrayal. Taiwan's semiconductor exports, critical for 60% of U.S. tech, are now pricier, risking chip shortages. This chaos isn't strategy. It's a wrecking ball, shattering alliances built over generations and driving up costs for American consumers. China, meanwhile, stays silent, letting Trump's tantrums do the work. Beijing won a 90-day tariff delay without concessions, a tactical victory that exposes Washington's weakness. China supplies 16% of U.S. imports, $600 billion in 2024, covering smartphones, clothing, and medicines. Walmart sources 60% of its goods from China. A trade halt would empty shelves in weeks. Beyond consumer goods, China controls 70% of global rare earth minerals, essential for electric vehicles, fighter jets, and smartphones. In 2010, a rare earth embargo nearly crippled Japan's tech sector. A U.S. cutoff would be catastrophic, with $50 billion in U.S. industries at risk. China's also dumping U.S. Treasury bonds, offloading $100 billion in 2024, weakening America's financial stability. Each sale pushes up interest rates, adding $10 billion annually to U.S. borrowing costs and fueling inflation, which hit 4.5% in mid-2025. The G7 is fracturing under Trump's tariffs. Canada, slapped without negotiation, is accused of fentanyl smuggling, a claim experts dismiss as a flimsy excuse. Europe's exporters, from German automakers to French winemakers, face $200 billion in losses, prompting EU threats of retaliation. Japan and the UK, still buying U.S. treasuries to stabilize markets, are financing the very country punishing them. This double burden, $340 billion in annual tariff revenue to offset Trump's $3.44 trillion tax cut deficit, has slashed G7 unity. Consumer spending in the U.S. grew just 0.8% in early 2025, as tariffs act like a hidden tax, costing households $1,500 annually, per the Tax Foundation. Supply chains are cracking, with 30% of U.S. manufacturers reporting delays due to tariff-driven chaos. China's playing a longer game. While Trump burns bridges, Beijing's signing trade deals across Africa, Southeast Asia, and Latin America, boosting its exports by 10% in 2024. China's ignoring U.S. sanctions, trading oil with Russia and Iran in yuan, with Russian imports surging 25% in 2025. India, defying U.S. threats, buys 34% of its oil from Russia, up from 2% pre-Ukraine war, prioritizing energy security over Washington's demands. BRICS nations are building a parallel trade system, with non-dollar transactions up 20%. This de-dollarization erodes U.S. financial leverage. A 10% drop in dollar demand could cost Americans $2,000 yearly in purchasing power. China's digital yuan now handles 15% of its global trade, signaling a shift that could dethrone the dollar. Trump's tariffs are backfiring at home. U.S. exporters face unpredictable rules, with 40% penalties for routing goods through wrong countries. Exemptions are murky, enforcement erratic, driving companies to relocate. The U.S. Chamber of Commerce reports 25% of exporters are eyeing Canada or Mexico, eroding America's trade reputation. Consumer prices are soaring. Cars up 10%, electronics 8%, as tariffs ripple through supply chains. The Dow dropped 600 points in June 2025 after China's bond sales forced Federal Reserve intervention, draining market liquidity. Trump's tax cuts, adding $3.44 trillion to the deficit, rely on tariff revenue, but the $340 billion yearly target is falling short, with only $200 billion collected in H1 2025. China's leverage is unmatched. Beyond rare earths and bonds, it holds $800 billion in U.S. debt, and further sales could spike mortgage rates to 8%, pricing out homebuyers. U.S. tech, reliant on Chinese components, faces $100 billion in costs if trade halts. Trump's delays on China tariffs, 3 in 2025, show he knows the stakes. But his ally bashing has isolated America. Canada's exports to China rose 12% as it pivots from U.S. markets. Europe's exploring BRICS partnerships, with Germany inking a $50 billion deal with China for green tech. The G7 scramble, Taiwan at 20%, Thailand at 19%, Switzerland at 39%, lacks logic, driven by power politics, not economics. Switzerland's pharmaceutical tariffs threaten U.S. drug supplies, with 20% of generics at risk of shortages. The global shift is accelerating. BRICS offers stability the U.S. no longer provides. China's energy partnerships, like a $30 billion LNG deal with Qatar, outpace U.S. efforts. Africa's trade with China hit $300 billion in 2024, doubling in 5 years. Latin America's soybean exports to China rose 15%, bypassing U.S. markets. Trump's tariffs, meant to isolate China, are empowering it. U.S. allies, financing America's debt, are trapped in a cycle of punishment. The Federal Reserve's interventions can't offset the damage. A 1% yield spike could cost $200 billion yearly. If China restricts rare earths or accelerates bond sales, U.S. industries could lose $150 billion, with 1 million jobs at risk. America's economy is on edge. Consumer confidence is at a 5-year low, with 60% of households cutting spending. Small businesses, facing 10% higher input costs, are laying off workers, with 500,000 jobs lost in Q2 2025. Manufacturers, hit by 30% supply chain delays, are relocating to Asia. Trump's public bravado masks private delays, but time's running out. China's parallel system, yuan trade, BRICS alliances, global deals, is eroding U.S. dominance. The dollar's share in global trade fell to 55% in 2025, down from 70% a decade ago. A further 10% drop could trigger a currency crisis, costing $3 trillion in U.S. wealth. The world's watching Trump trap himself. His tariffs aren't policy, they're chaos, alienating allies and emboldening rivals. China's strategic silence, backed by supply chains, minerals, and bonds, is checkmate in slow motion. The U.S. faces a choice: de-escalate and rebuild alliances, or double down and risk economic isolation. The next few months, G7 summits, BRICS meetings, trade talks, will decide if America can pivot or if China's rise becomes unstoppable. This isn't just a trade war. It's the dawn of a new global order, and every American, from Wall Street to Main Street, will feel the impact.